Hey folks, welcome back to Crypto CJS Trading Odyssey. Today we're diving into a topic that stirs up quite the debate among crypto traders. Low buy orders or stink bids? Are they a smart move or a risky gamble? Let's break it down. First off, what exactly is a stink bid? Simply put, it's a buy order placed at a significantly lower price than the current market value. The idea to catch those sudden, unpredictable dips in price and snag a bargain. Imagine this, you've been eyeing a particular cryptocurrency for a while. The price has been relatively stable, but you know the crypto world is anything but predictable. So you place a stink bid way below the current market price. If the market takes a nosedive, even for just a moment, your order could get filled and you've got yourself a deal. Sounds pretty sweet, right? But hold on a second. Let's talk about the flip side. What happens if that dip you were hoping for turns into a full-blown crash? Your order gets filled, sure. But now you're stuck holding an asset that's plummeting in value, and who knows how long it might take to recover. Stink bids can be a double-edged sword. On one hand, you might score a significant discount. On the other, you could be left holding the bag in a downward spiral. So how do you decide if a stink bid is right for you? It comes down to your risk tolerance and market analysis. If you're confident in the long-term potential of the asset and you're okay with the possibility of short-term losses, it might be worth the gamble. But if you're risk-averse or not well-versed in market trends, you might want to steer clear. Another tip is to use stink bids in conjunction with other trading strategies. Diversification is key. Don't put all your eggs in one basket, and always do not trade any funds that you cannot afford to lose. You must always have a plan in place to address a potential significant loss, such as a stop loss or a dollar cost averaging plan. And remember, doing your own research is crucial. The crypto market is highly volatile and timing is everything. Keep an eye on market news, sentiment, and technical indicators. The more informed you are, the better your chances of making smart trades. Now, let's delve a bit deeper into the mechanics of stink bids. When you place a stink bid, you're essentially betting on the market's volatility. Volatility can be your friend or foe. In a highly volatile market, prices can swing dramatically within minutes or even seconds. This is where stink bids can come in handy. By placing a low buy order, you're positioning yourself to take advantage of these rapid price movements. However, it's crucial to understand that not all price dips are created equal. Some dips are temporary and recover quickly, while others may signal a more prolonged downturn. This is why thorough market analysis and understanding the underlying factors driving the price movements are essential. Another aspect to consider is the liquidity of the asset. In a highly liquid market, your stink bid is more likely to get filled during a price dip. However, in a less liquid market, the chances of your order getting filled might be lower, and the price recovery could take longer. It's also worth noting that stink bids are not just for individual traders. Institutional investors and large trading firms also use this strategy to capitalize on market volatility. They often have sophisticated algorithms and trading systems in place to execute these orders efficiently. For retail traders, it's important to stay informed and use the tools available to you, such as stop-loss orders, market alerts, or dollar cost averaging strategies. In conclusion, stink bids can be a powerful tool in your trading arsenal, but they come with their own set of risks and rewards. By understanding the market dynamics, staying informed, and using a diversified approach, you can make more informed decisions and potentially capitalize on market opportunities. So, what's your strategy when it comes to stink bids? Do you have any tips or experiences to share? Let us know in the comments below. And as always, if you enjoyed this video, don't forget to like, subscribe, and hit that notification bell. Stay tuned for more insights and tips from Crypto CJS Trading Odyssey. Thanks for watching and happy trading. Remember, the key to successful trading is staying informed and being prepared for any market scenario. Until next time, keep learning and keep trading smart. Thanks for watching and happy trading.